Would you like to know what the standard of value and the premise of value is in a small business valuation? Hi, my name is Michael Lehner, and I am a certified public accountant accredited in business valuation, an accredited senior appraiser of the American Society of Appraisers, and a certified fraud examiner in New Jersey. Well, before the value of a business can be determined, the valuation analyst must know the purpose and circumstances surrounding the business valuation. This is known as the standard of value and the premise of value. Typically, the standards of value applicable in the context of small business valuations are fair market value and or fair value. In many cases, these standards of value refer to the definition under IRS Revenue Ruling 5960, which says, fair market value is the price at which the property would change hands between a hypothetical willing buyer and willing seller, neither being under any compulsion to buy or sell, and both having reasonable knowledge of the relevant facts. It is important to note that these buyers are hypothetical and not specific. When you bring in a specific buyer with unique motivation, this would be an example of investment value. That is the value to a particular investor based upon the individual investor requirements. For example, a manufacturing company with excess capacity. Fair value can have several meanings, depending on the purpose of the valuation. Often, fair value is defined as the amount that will compensate an owner involuntarily deprived of property. Commonly, there is a willing buyer but not a willing seller, and the buyer may be more knowledgeable than the seller. Fair value is a legal term left to judicial interpretation. Many consider fair value to be fair market value without discounts. Typically, minority and marketability discounts are not applied in statutory appraisal or oppression cases, absent extraordinary circumstances, as it is public policy not to reward oppressive conduct. The premise of value relates to the assumptions, such as assuming that the business will continue in its current form as a going concern, which is the case in most of the valuations that we perform, or that the value of the business lies in the proceeds from the sale of all of its assets minus the related debt and other liabilities, which is referred to as liquidation value. In an actual business transaction, it would be expected that the buyer and seller each would have an incentive to achieve an optimal outcome, and therefore would determine the fair market value of a business asset for such an acquisition. Therefore, business valuation results can vary considerably depending upon the selection of both the standard and the premise of value. If you are a business owner, an attorney, an accountant, or a business advisor and would like to learn more about business valuation, how to value a company, or how to find a qualified valuation expert, please visit our website or contact us via email or call us, or please visit our YouTube channel. Please feel free to comment below and tell us what you think of our video. Share this video on social media, and if you like it, please hit the thumbs up button and or subscribe to our YouTube channel. Again, my name is Michael Lehner. Thank you for watching our video.